Hey everybody, Tom Gentile. I want to welcome you to Tom's Trading Room. Glad to have you here for another lunch hour with me as we discuss, well, I got a lot I want to cover today. I want to talk about the markets. We're going to look at Fibonacci. We're going to look at meme stocks. I don't trade a lot of meme stocks, but I want to look at them just to see where all the chatter is and where the top 10 meme stocks are right now, what they are. And we're also going to get into something that I do work with, and that is unusual call and put volume. I plan on doing that today as well. All of this, the stuff that I trade, is all wrapped around rules-based opportunities. So what we look to do is spot rules-based opportunities, like I'm looking at on the screen here. Also, we're looking to plan and create alternative risk trades using options. And then finally, when we put these in, we plan them on the entry, we plan them on the exit, and we manage those from start to finish. That's what we do here, folks. Again, welcome. Glad to have you here. Before I begin, I got to go through some of the housekeeping real quick, and I'm going to be quick about it. The disclaimer you see on the screen, you can read it in its entirety. All you got to do is just hit pause on this live stream. But I'm going to mention two quick things. Number one, stock, options, and crypto. Well, they all have large potential rewards, but they also have large potential risk. The second thing is that I am not an investment advisor. All right, I'm going to show you ideas and things that I use in my own trading, but realize you are your own best risk advisor. What you do is between you, your spouse, significant other, and of course your broker. All right, so what are we going to do here today? A couple of things I have planned here. Like I said, if you're just joining, if you just jumped on a little late, markets are stable today. Crypto's had a bounce. Crypto did something this weekend that it has not done in over a month. What it's done is actually gone up over the weekend. We've seen a pattern where crypto falls off on Saturday and Sunday. And so we did see a changing of the guard in terms of what happens on the weekend. And I think that's something that's, we need to take a good hard look at. Is this the time in which crypto is now likely to move higher? It looks that way. I mean, we had pure liftoff yesterday. I was actually in my office yesterday afternoon moving a couple things around, and I had the big screen up. And the big screen was showing me Bitcoin. And I saw that big jump, and then I saw a drop. I had to do a refresh. I did the refresh, and there was no drop. And the jump took us up into the 39s. And of course, this morning we were trading above 40. And we'll talk about crypto. We'll look into that as well. So the other thing I want to mention, for those of you just tuning in with us this morning or this afternoon now, is the top meme stocks. Not just AMC, not just GME, but I want to show you the top 10 stocks that are getting some sort of post on the wall with the Wall Street Bets crowd on Reddit. So we'll talk about those, and we'll take a look at them and see if there's any correlation between any of these stocks and something I might trade. And then finally, we're going to take a look at unusual call and put volume. Now, in order to use the unusual call and put volume information, one thing that you can do is if you were to go to the Apple Store or go to the Google Play Store, and I mentioned this for the last couple of weeks, we have a new app that's out that's part of our TG Suite. All right, TG Suite, Tom Gentile Suite, TG Suite, is a list of premium apps that a good bit of our subscribers use, but we put one in there that everybody can have access to. You do not have to be a subscriber to Tom's Option Tools, right? If you're checking this out for the first time, you might want to look at downloading the TG Suite. So you go to TG Space Suite, download that sucker, and then what you can do from there is when you log in, if you're a Tom's Option Tools user, just use your username and password. If you are not, down at the bottom where the login page is, it'll say not a subscriber. Click there. Fill out some very little bits of information, and then you'll have access to the morning report. Once you click on it, it's going to open up 6 different lists that we look at every single day. The two I'm going to talk about today are unusual call volume and unusual put volume, and I will put my mouse on those right here. So again, logging in TG Suite, and then if you log in, whether you use our tools or not, and if you don't register, you get the free morning report. Click on the morning report, and you'll see 6 different reports that we get every single day. I'm going to look at the ones in the middle today. All right, so that is the plan. We'll come back to that because the rest of the day I want to spend looking at charts, looking at stocks, looking at options, looking at crypto, trying to find some opportunity out there for those of us that are interested in it. All right, so haven't done it in a while, okay? Haven't done this in a while, but I need to take a look at what's going on with the overall market. You know, we're now halfway through June. We're roughly halfway through this month, and we're coming into an area which is seasonally strong. So I'm looking for bullish opportunities over the next 2 to 3 weeks. Why? Well, one of the big reasons why is because no news. We're coming into a no news month right now, or the rest of the month, no news. We don't have earnings for at least 30 days. You know, we start seeing earnings until mid-July. We're not going to have a whole lot of reports. All right, the president's on the other side of the pond right now, and so all of that, you know, again, the little amount of news that comes out of DC is good for the stock market. When DC tightens its lips, Wall Street opens its purses and spends money. And this is the time to be looking for, from my mind, looking for these bullish opportunities that are out there. All right, so I'm looking at SPY. I've got it on the screen right now, so let's take a look here. And you can see I'm looking at an 80-day chart of the S&P. What I've done here on the right-hand side, this is just part of my stock list. So my stock list is comprised of ETFs that I like to follow and FANG stocks. And then what I'm going to do is I'm going to open up a meme stock list, which I've created just for today. And I also have created an unusual call option list and an unusual put option list by volume, because I look at those to see if there are any opportunities in them as well. All right, so S&P 500, we had a pullback low between mid-February and about the beginning of March. I thought that was a great place to start the low to high that's going on. But when you look at this Fibonacci retracement level from the lows at the beginning of March to the highs that have occurred very, very recently, all right, our pullback levels look to be 406, 400, and 394. And so, you know, we're looking at now the market had the hardest time getting and staying above 420. Again, we tried to do it back in mid-May. We tried to do it at the beginning of June, and we finally have closed up and have started to move a little higher and take out shorts. Shorts are folks that are short the markets at areas between where we are now and maybe lower, and they have stops in place where if the market moves higher, they realize I'm wrong, and they get out and they add to the buying binge. Now, the thing that we've also noticed about summer is June, the back half of June and the beginning of July typically they become some of the best opportunities seasonally. But we don't expect big moves, all right? We just see the doldrums of summer making the market slowly move higher. Now, when I think of opportunities to take in the marketplace on things that slowly move higher, the first thing I don't want to do is go out there and buy a bunch of call options, because I could lose in time value what I make in price. Maybe selling puts, maybe doing spreads, maybe doing something where time value is on my side. These are the things that I'm going to look at first. Okay, so S&P moving higher. How about the bond market? The bond market typically moves against stocks, but the fact that the bond market was so low just a couple weeks ago, we needed some blow off steam here. And as you can see, TLT has moved higher. We're getting a little bit of a pullback today because last week we saw the bond market move from the 130s up into the 140s rather quickly. We had a big lift in bonds. So it would make sense that the market's going to pull back a little bit just to give back a little of what's happened so fast in the last 5 days. But stock market, really is taking it in stride. As long as we don't see the bond market move above the mid 140s for TLT, which I've got on the screen right now, or we get down into the Fibonacci ranges that take us back into 130s, I think no news in the bond market is good news in the stock market. Okay. Moving forward, take a look at UUP. Again, I don't trade this. I simply use it as a benchmark for things like stocks and commodities. And as you can see, back in April, we had the dollar index making new highs for the year. Look what's happened since April. I mean, what a difference a month makes from April to May, taking us right back down to the lows of the year. We went from the highs of the year in April to the lows of the year in May, and we're trudging along the bottom right now, trading in the low 24s. Where does this become a problem? Well, as long as we stay where we are right now, again, no news in the US dollar is good news in the stock market. If the US dollar goes lower, that's also going to arbitrarily push the markets higher. The only place this becomes a problem for the stock market is if the US dollar catches some bids and gets above 24.5. Right? We're trading at 24.33. It takes a lot to get this thing to move in these incremental small amounts. So we'll keep an eye on that. How about the oil markets? New highs. I mean, come on. Who's surprised? Who's surprised at the new highs in the oil market? Think about fundamentally what's happened in the last month. In fact, in the last week, we've seen the pipeline, the Keystone pipeline, closed. In fact, the developer's kind of folding up shop right now. So that's going to change our direction for dirty energy. And of course, that's causing this this shift, because we don't see, even though it's not production, it's supply chain. And so we already know what's happened with supply chain disruption already in the chip industry, in certain commodities. Even food is causing prices of commodities to go higher, even though there's plenty of them out there in some cases. It's getting them to from the manufacturer to the actual retail or to the consumer. And so that seems to be the case with oil right now. Do we still have a lot of oil in the world? Yes. But getting it to people, getting a little bit tougher. You take a look at that. You take a look at what happened. What's happened with the gas pipeline last month, right? And the hacking that went on, and all these little things are causing extrinsic value, all right, or volatility. The what ifs to come forward and say, well, what if it happens again? And that's really what's pushing the price of oil higher right now. So that's reflected in USO. When oil goes higher, oil stocks go higher. When oil stocks go higher, that helps the overall stock market. And that might be what's holding up a bit of the market here recently as well. All right, so that's stocks, bonds, currencies, commodities. How about gold? Gold got a little bit of a drift this morning. And if you take a look at GLD, so GLD, and I'm looking at the lows that occurred back in March when it took GLD down to a price of 158. We saw the highs come up to around 178. We've seen a pullback. We saw a gap down today. You take a look at Friday's close, which was just below 176, and then the open this morning, which was around 173. In fact, the low was 172.95. We've traded off that low as we're around 174.5 now, but still, we broke some key support from 2 weeks ago. And we're coming up into an area where we see Fibonacci 38% retracement down here around 174.64, right? So this drop in the last couple of days, definitely not good for holders of gold that want to hold long, right? But we have a long-term outlook in GLD. In fact, my long-term outlook is long, and my short-term outlook, based on the chart I see today, looks like we're going to stay above those lows that happened this morning and maybe drift higher and fill that gap a little bit, where I see that, getting up to around that 160 that 176 level by week's end. And again, what do I look at here? You can buy calls, longer term. If I want to acquire more GLD, maybe sell some puts in the event that I'm wrong. Sell some puts down around the open today, perhaps, and I add to my GLD position. So that's some ideas we can look at too. All right. So that's stocks, bonds, currencies, and commodities. Let's take a look and see what's going on with those of you that are commenting today. Hello, good morning. Glad to see everybody in here today. I see a lot of repeat offenders here. Great to see you guys. And I can see a couple of you asking about the free app. No, it's not available on a PC. It's only available on smart devices. To get the free version. We have a version of it. Now, we have a free version of it on tomsoptiontools.com. And if you've never tried Tom's Option Tools, then check out our 2-week free trial. All right, you can get a 2-week free trial to our option trader, our contrarian trader, our complete trader, and all of those reports that come along with them. All right, again, tomsoptiontools.com is where you would go. And I actually have a link to that 2-week free trial down below me, below the video, below the live stream. It's in the description tab. That's where you would go to grab that free trial. The free app, you just have to go online and grab that. And we're going to get to that in a little bit later in the program. We're going to be using that free app to look at, to look at things like unusually high calls and unusually high puts. And I've already got those queued up. I'm going to show those to you here as well. Guys, I'm in chat mode right now, just kind of looking to see what's going on here. Very charismatic. I don't know how charismatic I am. You know, I just try to get through the day. That's what I do. I'll mention this too. Our chats, guys, we do have super chat donations. And we really appreciate those of you that donate to the channel. Realize this, all of your donations go to charity. We did that in 2020 when we actually started this channel, and we're doing it again here in 2021. So all of our donations, all of our monetization on YouTube, all right, those little commercials you have to watch and skip, all right, all of that, you know, what comes in ends up going right out to various charities. And I want to let you guys all know that. And thank you, because you're the ones that are actually, allowing for those donations to happen. So thank you once again. So hello, everybody. Morning from Arizona there from Maxine. Let's see. Hopefully Bitcoin will break out above that 42K today. You know what? I certainly hope so. We're going to look at Bitcoin, Adele. We're going to look at Bitcoin in just a little bit. And I want to see, I want to show you where 42 is on my screen, because that's important as well. All right. What do we got here? RP says he's in the First Coast. The First Coast. You know, I got to get over to the First Coast because I did a charity auction. This was a while back, and so I won this pass to go to Daytona to do an hour's worth of laps in a NASCAR. Just me, no pace car. I can go as fast as I want. Yes, I'm going to get insurance on the car. I'll get full coverage on that car and myself. But I'm looking forward to doing that. And I just don't know when I'm going to find time to do it. But I want to do it sometime this year. I'm probably going to wait until we get more toward the fall when the track's cool, a little cooler. And but I'll be over on the First Coast there eventually. RP, glad to see you there. So hello from Indiana. Glad to see you, Tony. Tony from Indiana. Glad to see you checking in on the channel here. Let's get to FANG, because that's where I want to go to next, guys. So let's go ahead and take a look at what's happening in FANG stocks. So back to the screen here, and let's see. Pop that full screen so we can see it. FANG. So we'll start out with Facebook. And as you can see, Facebook is on the screen right now. I'm blowing it up as far as I can. You know, let's get rid of my face for a moment. There you go. You can see everything now. So on FANG, again, I'm utilizing the 80-day chart. And the reason I'm utilizing the 80-day chart, let me make this important. This is important. Let me get in here. The reason that I'm utilizing the 80-day chart is because stocks hit a low back between February and March. That's where I'm starting the Fibonacci. Now, Fibonacci, for those of you who've asked before, is simply, I mean, you look at, hey, a lot of people say he's a dead Italian mathematician. All right. Fibonacci. Fibonacci is not something I sprinkle on my salad. But what we do is I sprinkle this into the stocks that I look at. And what I'm looking at to start the Fibonacci sequence, and what I'm looking at is what's called Fibonacci retracements. We can also add extensions to our retracements, but right now, just getting buy zones in the market. Because if I'm seasonally bullish on stocks overall for the next, let's call it 30 days, then I want to find bullish opportunities. And to find bullish opportunities, I'm looking for pullbacks on uptrending charts. This is an uptrending chart you see here, Facebook. You got to start it somewhere. I'm starting it. Let's put the big screen up again. I'm starting it at the lows, and I'm looking for lows to the left, highs to the right. Lows to the left, highs to the right. So that starts the sequence. From there, I'm looking for 3 areas of pullback. And these 3 areas of pullback can be buying opportunities. The 38% retracement, that means if you take this low down here at 255 and you take this high up here at 336, 38% off, and you're talking about 305. 50% off, you're talking about 295. 61% off or 62% off, 285. These are 3 areas that are what I like to call Fibonacci buying opportunities. This red line you see here has absolutely nothing to do with Fibonacci. These are option prices. And as you can see, option prices in Facebook back in the April to May category were high. In fact, it's safe to say that Fibonacci prices in Facebook were double where they were back in April from where they are now, because we've gone from a 50, these are percentages, all right? A 50 in terms of how much these options are costing down to 22, from 50% to 22%. It's like the VIX, but I have the VIX for every single stock. And we have a way of looking at those near money calls, near money puts, putting this chart together and charting these options to see how cheap or expensive they are. They're cheap compared to where they were right before earnings. And that's where you see that big drop off. All right, so we see Facebook, we see this Fibonacci area. Let me blow it up for everybody so you can really see it. For those of you that are looking at this on a phone, 336.58 is the highs that have occurred this year. 305.30, that's your level 1 buy as a Fibonacci trader. 50% off gives me a level 2 buy at 295.64. And then level 3 is a 61.8% retracement at 285.97. So that's what we see there when we look at Facebook and we're looking at those Fibonacci opportunities. Let's move this thing forward. Apple. Now, Apple had a low this year around just after the first week of March when it clocked in at 116. It had a high earlier in the year, about a month later. It had a high of around 134.84. Now, you might say, Tom, the high is over here, not here. What we do is we chart, all right? We chart the closes, not the highs or lows, not the wicks of the candle. We chart the opens to the closes, all right? And when you look at this open here, that open down at the bottom, that begins the Fibonacci sequence. Open to close. Closing high is the high that we look at. Yes, we spiked up that day after earnings, but we ended up closing a lot lower. We closed below that high. That's why we don't clock the high here. We clock the high on the close of April 19th. Now look what's happened since then. We've come down, and we very quickly came down to the low, that 61.8% retracement. And notice we closed below it for one day, but we popped above it. We traded below it. We popped above it, traded below it. Now, if you're going to trade Apple and you're looking at it now, guess what day is the best day to be a buyer of Apple? Let's put the big chart back up. Let me put the big. Look what happened today. We got decisively above that 38% retracement. This is a strong indicator that Apple may finally see some bulls pulling into it. Does this have anything to do with WWDC that happened recently? Maybe. All right. The other thing that's interesting is, me and the gang were talking last night because we're always talking about the stock market, and we're huddled around we're huddled around the kitchen table. And you know what's interesting? We were talking about the new AirTag, all right, the new product by Apple, AirTag. And I was asking my nephews, I said, what makes AirTag different than Tile? All right, so for those of you that don't know what I'm talking about, AirTag and Tile are beacons, if you will. So you put one on your keychain, you put one in your purse or your backpack. And therefore, if you lose it somewhere, you can use your smartphone, or you can, in some cases, use your desktop to find these items. All right. So Apple had something called Find My iPhone. And when I lost my iPhone, which every once in a while I do, I just go to my desktop, I pull up my Find app, and then I run it, and I have it ding, and I can see where my phone is. And if I put the dinger on, it'll ping until I go and find it and shut the ping off. Well, now Apple has created something called AirTag, which allows the same thing to be done on literally any device you stick this thing to. What I found out, which I didn't know, is that the Tile only worked in a Wi-Fi area, but or maybe in a Bluetooth area too. But AirTag works in the entire Apple community, which means that if you have an AirTag on a product, let's say for instance you stuck one in your wallet and your wallet was stolen, or you misplaced it. Let's say you misplaced it. Who knows that you're at a house that was outside of your range, or a house that was outside of your a wireless device. If someone has an Apple phone in the area, that thing services as a beacon, and it will utilize the cell of that Apple phone that's close by, and it'll let you know where it is. I think that's a game changer, and it's such a little thing. These cost, and my nephew is in the scanning. One of the business they do is scanning, and they do data collection. All right, data collection for conferences and data collection for seminars, etc. And he was telling me that these things literally cost Apple $1 to $1.50 to sell them for $39. It's one of the highest margin things that they have on the shelf right now. They're out of stock. You can't get these things for weeks. It's $39. You might say, what? I mean, what? Such a small thing, but it could lead to bigger things down the road. All right, so that's so you look at Apple. Looks like a very interesting buying opportunity for Apple based on the move up off that Fibonacci. Amazon. Here's another one. I think for the markets to make new highs and to get into 35, above 35,000 and move up into the 40,000s for Dow, and more importantly for the S&P 500 and the SPY to get above 425 and get into the 430s, 440s, even 450. Stocks like Apple and Amazon have to get into new highs, and it looks like, based on last week's action, it looks like that's what they want to do. If you take a look at Thursday's action for Amazon, same exact thing happened. We had a low back in March. That was around 29.50. We had a high that took us up to about 34.75. That happened in May, and we've been waffling along. But look what happened last week. A lot of buying, a lot of interest in Amazon as we went from really about around that 32 area. Last week we were at 32. Now we're 100 points, over 100 points higher. And I think all this does is fuel Amazon to gain steam and make new high after new high after new high. Again, in the doldrums of summer. Okay. So that is Amazon. Take a look at Netflix. Of the FANG stocks, Netflix is really the most disappointing one of the group because it's still sitting. It just came off of its lows today. I wouldn't get excited about Netflix unless we get above and close above the 32% area, which would put us at 511. I mean, this stock is barely above 500. It needs to close above and stay above 500 and create a floor at 500 before I start to feel more comfortable about it. Netflix out, Google in. Google, all-time highs, yearly highs. We're coming up, guys, just last week, Google's high was back here. All right, in the last week, we've jumped to new highs. We made new highs on Thursday. We had a new intraday high on Friday. We're off a little bit today. Not something I'd be too concerned about. But again, Google the strongest, Netflix the weakest. Amazon and Apple are really the ones that I see as the potential opportunities when I look at Fibonacci. Let's take a look at one more, then we'll get into the meme stocks, and that's Tesla. Tesla, I mean, you know, you could say it's a meme stock. Oh boy. Let's bring the charts up there. I got all excited and I didn't give you guys, you know, really, I mean, if I were to just back up real quick, you know, because I had those, I had big head on and small chart. Now I've got small head and big chart. And again, I'm talking about Google really making new all-time highs. If you trade with the trend, that's what you want to be jumping on right now. If I back up to Netflix, I don't like this at all. Take a look at that lows down at the bottom. It's going against the grain. And then, of course, we were talking about Amazon, which is coming out, again, like Apple, getting above that 38% retracement, coming closer and closer to those new highs. There's where we are. Tesla, you know, Tesla looks a lot like Netflix. Why is Tesla down so much? One word, Bitcoin. And real, if you want to talk about more than one word, it's the waffling that's been happening over at Tesla from Elon Musk. I mean, I'm on again. I love Bitcoin. I'm going to let you buy Tesla products with Bitcoin. Oh, no, I'm not. Now I'm not. Oh, you know what? I will, but only when they clean up their act. That's what's happened. That was the latest, the latest piece of news that pushed Bitcoin higher yesterday was Elon Musk put another tweet out. One guy seems to move this market more than anything else recently. Now he's saying that Tesla will once again approve Bitcoin as something you can use to transact and buy product at Tesla. But he wants to see that Bitcoin mined cleaner, more energy efficient, etc. All right, so that started the bandwagon for Bitcoin, and we've just seen things progress from there. All right. So from there, I want to take a look at the boards, and I want to see what you have to say. Once again, guys, if you're just tuning in, welcome to the program. We did a whole piece on stocks. We looked at stocks, bonds, currencies, commodities. We looked at the FANG stocks, and I just ended this session with Tesla. So let's see what we have happening. Again, where do I find detail? Where do I find detailed information on the top 10 summer trades? If you actually look at that video, and I think that's what you're referring to, you will get the detailed information right there in that video. Jim, that's a pretty big video you can get from our publisher. So again, thank you for the comment. Apple calls. Well, when we were looking at Apple, big head. There's big head. We were looking at Apple CW. The one thing we were also looking at was the implied volatility, which is quite low compared to where it was. So yes, in my mind, if I look at Apple and I see that Apple, for bullish purposes, maybe it's Fibonacci, maybe it's seasonality, maybe it's something else. If you like those, then I believe Apple calls make the most sense because they are cheap. All right. Thank you very much for the text there. JP Morgan Target, next JP Morgan Target. You know what? Let's throw that on the screen while we're in our area of Fibonacci. Let's take a look and see what we got. So JPM, making a big play on Bitcoin and cryptocurrency and digital assets as well. But all recently, look what's happened with JP Morgan and more importantly, the bank stocks. All right, bank stocks really caught, they caught some action over the last month, but over the last week, they've just, you know what? They failed to make new highs. A lot of them did this, not just JP Morgan. Bank of America did the same thing, but investment banks like JP Morgan really hit it hard. It hit a Fibonacci low down here at 156.81, or just came off those lows, very close to it. There's your Fibonacci retracement. Let me blow that up. You can see that level 2 buy. If you're a fib trader, we came down very close and bounced off that. We're not that far off of it. So again, it has to do with what happens tomorrow. All right, what happens tomorrow with the stock? If we stay inside this range tomorrow, then I feel pretty good that level 2 buy, that 50% off buy, can happen. Some of you just joining might say 50% off of what, Tom? 50% off of the lows that occurred back in February to the highs that occurred just last week. We've seen a 50% move from low to high. Look how long it took to get from that low to that high. How many months did we go through? Let's see. We started at the beginning of March. April, May, June, 3.5 months it took, and then we wiped out half of those gains in 1, 2, 3, 4, 5, 6 days. Again, the bull takes the stairs, the bear takes the elevator. All right, the bear jumps, the bull climbs. Just means that the stock market drops. Stocks will drop much faster than they run up in most cases, not in every case, right? When we think about every case, we think about, well, starts moving me into meme stocks. And so, again, those meme stocks are something I'm going to get into next. Let's look at one more comment here. Mal, good to see you there. Hey, listen, you got a question here. Can you put fib extensions on Tom's auto fibs 138, 161 levels to give a possible price target? We are going to make that available. It's going to take some time, but eventually we'll have the extension stuff there. We will add that as part of the tools. We got a couple other things to do in the job jar, but I've talked to the programmers about putting extensions in place. Really want to have those in there. But thank you very much for the comment. I appreciate that. So let's talk about let's go ahead and talk about meme stocks as we're well into the program right now. And so meme stocks, and I've got it. I forgot something, guys. I forgot something. Let's talk about cryptocurrency. Jacob's asking the question, and Jacob, you brought up a question. Thank you, because what you also did, you brought up something that I almost failed to talk about, and that's cryptocurrency. All right. I'm going to get into YFI as part of the crypto environment. But, if you take a look at crypto right now, and I had this on the screen here, you can see it, Bitcoin, even this morning, we were trading in the 39 level, and then here we go, 9 a.m., we jump up into the 40s, and we jumped up to 41. And this happened, around the 10:30 area. We're getting a little bit of a pullback here. Obviously, that's to be expected. That's with anything that happens. But again, where do we go from here? Now, I want to get out of the 15-minute charts. I want to get out of the 5-minute charts. I want to get what I've learned in my more than half my life that I've been doing this. I started doing this when I was 21, all right? I'm well over the 21-year age limit now. In fact, I'm 56 years old, or I will be. I will be 56 in 2 short weeks. So I'm still 55. But, what I've learned in these almost 36 years of being in the industry, and much of that being a retail trader, is this. The shorter term charts that you put on the screen, if I put a 1-minute chart on here, the shorter term chart you put on the screen, listen to this. This is important. All right. This requires me to get rid of everything except look at me. Look at me. All right. I'm seeing you. I'm seeing your text. The shorter term the chart is, the more emotion you're going to get in the market, and the more likely you're going to do something you're going to regret, either getting into or getting out of a trade. Okay, I'm telling you this. It happened to me in 1987 with the market crash. It happened to me in much smaller circumstances since then. But every time I turn the short-term charts on, the adrenaline goes up. All right, and we don't want that as traders. We want to be rules-based traders. So I'm now going to turn on the longer-term charts. And the longer-term charts look like this. Slow and steady. And now I have the ability to look for patterns, backtest patterns, refine those patterns, and look at the markets more objectively, not subjectively. All right? This is subjection right here. This is objection when you're looking at objective markets. So if you take a look at crypto right now, I said last week that we were putting a base in And it was going to be very crucial to see whether that base was going to hold and create buying opportunities, or were we going to go in the 20s? Well, again, if you're just joining me, you know what happened. You know what happened, and maybe you don't know this, but this weekend was something we saw happen this weekend did not happen over the last month or so. And that is that the cryptocurrency markets went higher over the weekend, because if you look at the past 5 or 6 weekends, we saw a fall off. This is the first weekend we've seen in several weekends where the markets actually went higher Saturday and really Sunday. Sunday, people bought the markets. And here we are Monday, we're even higher. So where do we go? There was a question about Bitcoin going to 42. I see 42 easily. I see 43. I see 44. See this level right here? Let's talk about the levels now. In the case of Fibonacci, see what I've done here? This is a high to low fib. High to low fib in the last 6 weeks. The highs that occurred back there at 63,558. The lows that occurred just last week. And it wasn't the all-time low. It wasn't the all-time low at 30,000 that we're talking about. We're talking about that gravitational low that everyone seemed to be at. That was around 33,400. All right, that was where we were last week. We were all having this discussion last week. Were we going to penetrate 30,000 and go lower? Well, that didn't happen. Now we're seeing a bump higher. Now, it's very interesting that I've got some areas. Right now, we're in an area. We're in an area of what I like to call minimal resistance. The minimal resistance area was when we came down last month, and we jumped up and we hit this area, this cluster of opens and closes, and then highs after that. So this is an area of what I like to call minimal resistance. We get above and close above this area. That's what I'm looking for next. 44,926. That's an area that we call the 38% resistance going from high to low. This is going to be an area where we're going to see some resistance. Next stop, 48.4. Next stop, 52. Those are the 38, 50, and 61% retracements to the upside. All right, we're going to get upside resistance here. So just keep that in mind. If you're a Bitcoin trader, these are great areas to take some profits. If you're a Bitcoin investor like me, you're looking at these areas and you're saying to yourself, all right, are we going to cross through them? Are we going to get more of a buying binge? Is there going to be more news that's going to come out? We've had lots of good news on the way down. And then we had some bad news. And maybe the bad news is, we flushed out all the sellers. Again, time will tell. That's BTC. Let's take a look at Ethereum. Ethereum ETH. I'm going to update this with Ethereum. Again, 100 days, I added the weekends in. 100 days, last 100 days. And you can see Ethereum, just like last week. Ethereum has an upward slope. Starts at the bottom, 1,600. Ran up as high as 4178. Crashed. Ran all the way down and hit some major support down here, these dotted lines. And then we've kind of settled into, we ran up, we tagged the resistance at 50% twice. That's the area right there, 2880. That's the area that I'm looking at right now. So 2880. Again, let's get rid of these moving averages. I don't want to see this. Right now, what I want to see is I want to see Fibonacci ranges. And I'm looking at that level right there, 2880.63. Getting above that, and then I think we're back to the races again. With of course 30, that 3186 level, but 4178. All of that ties to where we are at the 50% mark. The 50% mark being 2880.63. All right. So there we go. That's what we see in terms of Ethereum. Now, let's take a look at let's take a look at Yearn Finance. All right. I like Yearn Finance. Full disclosure, I bought Yearn Finance. I think it was yesterday. I bought some Yearn Finance. YFI is what we're talking about. That's the symbol. Let's scroll down, take a look at YFI. There it is. Let's see what Yearn Finance has done just in the even in the last couple of days. But Yearn, now Yearn, I mean, you take a look at this one. This one's got, this one's no longer. When you take a look at a chart that has a low down here around the 30,000 level, the high, which this thing got to the 95 before peeling off, but its closing high was 82.5. And then we take a Fibonacci disaster. I mean, this thing just dumped out back down to 25, but then settled in this area, which was in the low 30s. Well, guess what happened? We started scrolling down, cruising down again. And yesterday, once again, we had some liftoff. And now here sits Yearn at just below 40,000. I want to reset this because I don't like this anymore. What I want to see is I want to see top to bottom. So we're going to change this from 100-day to a 50-day. Going to widen out the chart a little bit. It's also going to do something to my Fibonacci, and it's going to show me the high at 82.5 to the more recent low at 32,661. And where do we sit in the area of Yearn Finance? All right, we sit right in here. And the reason I want to show this to you is because, I can even take a 40-day chart and widen this out even more. Because I just want to get the information on the screen that's the most relevant for us to look at. Now, why do I like Yearn Finance? I think this one provides it provides a great, that great proof of work to the blockchain community. The other thing that I really like about this one is how many coins do we have absolutely available, mined and unmined on Bitcoin? Was it 21 million? Right? How about Ethereum? A couple 100 million? Yearn Finance? 36,000 coins. That's it. That's part of what is commanding this high price that you see here, because of the simple fact that the amount of coins in circulation are so small. So when you look at that 32 price tag and you say, oh, it's just like Bitcoin. It's not just like Bitcoin. All right. First of all, it's completely different to Bitcoin and what the coin does and what the company behind the project is all about. But more importantly, look at the circulation. Completely different. Right? Yes, I bought some Yearn, and I'm up a little bit on it. I didn't get it down here at the bottom of this candle. All right, I got it somewhere in the middle of the candle yesterday, but we're going higher. And I like Yearn, and I like Yearn as a long-term indicator. And so, long-term indicator, long-term digital asset, right? I saw the word indicator on my screen here. And so as you look along here, you can see a lone new trader is said something about adding an RSI indicator on. And so, Dale likes YFI too. Maybe for those reasons, maybe for others. If I throw an indicator on there, like the RSI, and that's what we see right now, is that all of our charts, not just candles, but if you scroll down, you can see what the RSI looks like. Nowhere near the buy zone or sell zone. All right. MACD is negative, but it's coming up fast. And the other thing I notice here is we're about to get a MACD cross. That's bullish. All right. We haven't seen a MACD cross since the bearish cross that happened back in mid-May. Look at the Bollinger Band. Bollinger Band is a unit of, it's just a way of looking at statistical volatility on the stock. The statistical volatility is much, much lower than where it's been. There's that RSI again, et cetera. And so you can see here, looking at Yearn Finance, that there's a lot of technical reasons and even seasonal reasons why this one looks like a potential bullish opportunity. And we discussed this. We were talking about this last week. So there we go. That's YFI. Take a look at Litecoin. Someone Harmon's asked about Litecoin, so let's look at Litecoin. And let's see what's going on with Litecoin. Litecoin is LTC, by the way. And so got to move it up on the screen here a little bit and find LTC. And we'll finish out with LTC because I want to get to unusual call and unusual put volume. But take a look at LTC, and you can see LTC here. Same things happen. I mean, you got this high that occurred back at 388. That was back in May when everything was high. And then you got the low that occurred on Litecoin. It happened really fast. My wife owns Litecoin, by the way. She's not happy about this at all because she bought Litecoin in the 3s. And it's down here, it's down here trading around 174. Well off the lows of 142. But it too is making the turn. It does look a little more bearish than the Bitcoins of the world and the Yearns of the world. And so those are ones that are on there as well. Now, we have ways of looking at these to look at other buying opportunities, like the fact that are there, if you look at the short-term, long-term, intermediate-term channels, what they're doing. I'm going to save that for another live cast that we'll do in the future. But for right now, all things being equal, crypto has definitely gotten an interesting bounce over the weekend. We'll see where it ends up going after that. And I am seeing several small coins that are popping up and giving interesting opportunities right now. All right, so let's cut forth to the final thing that I want to talk about today. And for those of you that are just joining me, again, I want to say welcome to all of you that are joining. Feel free to text me and each other. I can see the comment section. I don't look at it. I don't look at the comments like, a lot of live streamers out there just go like this. Yeah, so that's what's this. Oh, yeah, this is going up. Yeah, that might be going down. I don't do that, all right? I'm not into hope, fear, greed, any combination of that. I don't like emotion, right? I don't like the drama that comes with stocks. Drama usually equals losses. What we want to do is spot opportunities. And we want to take those opportunities and create alternative risk trades, right? Rules-based opportunities, meaning we're looking for patterns that recur and repeat over and over and over again. All right, I got 2 of them right here I want to share with you. And I want to share them with you right now. All right, so let's take a look and see what's going on with, first of all, I mentioned this already, that if you haven't already, and you want to follow along with something that I do on a regular basis, then download our new free app. All right, it's part of the TG Suite. The TG Suite's not a free app. All right, there are apps within the TG Suite that go out. They're premium-based apps. But if you take a look at, if you download the app and you go to not a subscriber and you fill out the information there, you're going to have access to our morning report. Our morning report gives you lists of the highest volume stocks, highest open interest stocks on options. We're talking about options. Unusual call option volume, unusual put option volume, cheap implied volatility, that means cheap options, and expensive implied volatility, that means expensive options. Today, I want to discuss call and put volume, and unusually high call and put volume. All right. Harmon, thank you very much. I appreciate that live chat donation. And by the way, guys, I will tell you this. We are going to do a live event early next year. And early next year, we're going to do that live event. We'll talk about where that live event's going to be. So you guys want to come and do some in-person stuff, that is potentially going to happen. All right. We're going to let the rest of the year play itself out as the masks come off and the shots go in and we get back to some normalcy. I mean, it's amazing when you see what's going on in Florida. I walked into Lowe's last week. I'm always in the Lowe's or Home Depot getting something on the honeydew list. But I'm walking into Lowe's and I'm walking into different retail places. And down here in Florida, it's as if it didn't happen. No one's wearing masks anymore. And it's surreal because when you look on TV and you look at what's going on in New York and San Francisco, the masks are still on. And yet down here, it's like we're living in some completely different society. Anyway, enough about that. Let's get into call volume, put volume. And what I want to talk about with call volume and put volume first is let's discuss what these two things are for those of you that are really kind of new to volume. All right, so volume in the stock market is easy to assert. I mean, if you look at a stock, you can get a stock's traded volume. That's how many shares were traded on the day, both long and short, all combined together. All right. For someone to buy a stock, someone else has to sell a stock. There's a market maker there that allows both of those things to happen. The market maker becomes the buyer and the seller simultaneously. All right. So call volume. Call volume, now we're talking about options, all right? Calls, puts. Call volume is going to be, call option volume is just simply the amount of buying and selling activity in a particular option. In a particular option, okay? And so for that particular option, what we're going to look at is we're going to see, there's a lot of options that have no volume. Any of you that are option traders know this. But we're going to look for call volume that's significantly high. All right. Before I do that, Craig, thank you very much, buddy. You need some love. I'll show you some love. Thank you very much for that donation, and that donation will go out. We'll talk about the charities that we're donating to. We typically donate to charities almost on a monthly basis now, and so we did a lot of stuff with LBX Sports last month. We're looking at St. Jude this month. Possibly a couple of others. We'll bring those out there. But you guys are helping to, to really put, forth, everything we monetize here on the channel is going into charity. So I want you guys to know that. Even if you're watching ads that come across the channel, realize that money that comes in for the channel, that goes right back out. All right. So all of our proceeds on this channel go to benefit various charities. Okay. So let's switch gears here and let's look at unusual call volume, because something came up on my radar for unusual call volume. Now, I'm going to bring up the morning report right here on the site. This is available on Tom's Option Tools, but again, you can get it using the free report that we offer through the app. So take a look here at our top 10 on the left. These are the unusually high call option volume that occurred from the most recent day. That's Friday. And we're seeing that Philip Morris is in the top of the list. Apache is number 2. And the way you read this is, you see where it says Philip Morris. I'm going to bring this in real. Well, this is as high as I can get, guys. Thought I was going to be able to bring it in real close. Take a look at this. Philip Morris, 220121 C40. What in the world does that mean? This is 2022. This is January. This is January 21st. So the January 21st, 2021 or 2022 calls, the 40 calls, well, they were the most actively, they had the highest amount of call buying or selling, as their volume on Friday was 72,870. That's a lot of action for a leap option in Philip Morris. So a great deal of maybe one trader or a collective group of traders went in and bought this option, expecting Philip Morris's stock price to be well above 40 by January 21st, 2022. That's how we read this whole thing. APA, the July 2nd, 25 calls, 13,021. Dell came in third. Their July 16th, 110 calls are trading at 88 cents. They traded 88 cents on Friday. 7,900 call contracts purchased or sold. Morgan Stanley, Citigroup, Mosaic's on here, Uber's on here, AT&T, GM, and rounding out the top 10, Valero with their 85 calls that expire July 16th. They traded at 198, 12,000 contracts there. So these are unusually high call option volume. Unusual to what? To what the normal average call volume is in that entire series. Now, I look at that, and some of you that that follow, who in here right now, I'm going to throw a question to the group right now. Who in here watching this live stream right now looks at unusual option pricing for call volume or unusual option pricing for put volume? And if you do, what do you do with that information? All right. I'm showing you You don't need to follow the Nigerians at 12 o'clock when they show up on that lunchtime. You don't need to follow them. You could bring this stuff up right away, right? I love the Nigerians, by the way. Don't think I don't, all right? Any chance I'm in New York or Chicago, I look for John or Pete, all right? Typically John. But yeah, you can get this stuff right here off the web. What you can do with this, because there's some folks out there that say, let's take a look at Philip Morris. So there's 72,870 of this particular call option that were bought or sold on Friday. And you might look at that and say, well, how do I know whether those calls were bought or sold? Because there are three things that are going on here with these calls. Somebody's buying them because they think the stock's going up. Somebody's selling them because they think the stock is staying where it is or going down. Or somebody's selling them against a position of stock they hold, therefore creating the covered call trade. Two of those three scenarios are bullish. So I have to go with the odds. Okay? Same thing with APA, Dell, Morgan Stanley, Citigroup, Mosaic, etc. So I'll tell you what I do with these. Hey there. I like your answer. Let's put that up on the board. I look at vol and open interest, but if not enough open interest, then maybe too illiquid when I want out. Absolutely true. Absolutely true. Good. That's a great way to look at it. But what I do is I won't trade something just because it shows up on this screen, that screen. I won't I won't trade it just. There's gotta be something else there. There's gotta be something else. Because this isn't really, in my mind, the best indicator of whether something's going higher or lower. It has to be something else, all right? It has to be looking at, for instance, maybe I'm looking at something seasonally, all right? Guess what? Of these 10 stocks, there is one on here that's grabbing my interest, and the one is the letter C, Citigroup. So we take a look at Citigroup. I'm going to go over the stock charts once again. And I'm going to pop in Citi for C because Citigroup had a lot of call options that were bought on Friday. And Citigroup is down, but this one might be one worth looking at to the upside and maybe looking at that price, that level one buying opportunity at 74.38. Now, again, that Citigroup option was not an option that expires this week. That was something out in July. So someone's looking at that option, looking at a July expiration, right? So this one might be interesting because guess what? The money calendar has Citigroup going up between now and mid-July. So maybe we look at an option opportunity in Citigroup. What Citigroup's options look like? Let's put the big screen on. Let's share the big screen with you. And I'm going to go out here and let's see if we can, if something's happening in Citigroup. Oh, termination. I'll try something else then. Let's go ahead and let's take a look at my stock charts with Citigroup. And I'm actually going to look at the options. Let's look at the chains. I can do it this way. So all the way out to July 16th, because that's what I want to look at. I want to look at those July 16th options. Those expire on a Friday. There's 27 different strikes, and we have 32 days to expiration. All of that information available right there. So I'm going to look at those. I'm going to come over, and I'm going to go ahead and update the chart, and I'm going to look and see what I have for calls and puts. Call options. Here we go. Wow. Hey, you know what? There's the July 80s. Somebody's buying a lot of. There's a lot of July 80s trading. Maybe. Perhaps we look at something like the 75-80 spread. So if we bought the 75s, they're trading for 247, and we sold those 80s that everybody else seems to be purchasing at 72 cents, what's that trade going to look like? Let's hit the risk graph and find out. So that's a $175 trade, putting those two together to have a maximum profit of $325. That's a reward to risk ratio of over 185%. All right. That looks like, again, take a look at the risk graph. This is, it takes me a bit to get in here, guys. There's your risk graph. All right. There's your absolute risk over here. If this stock continues to go down, the worst that we can lose is that $175. But the most we can make is that roughly $325. And all we got to do to get to that is get back up to where we were just 2 days ago. Okay, 3 days ago. And we're back to that area. Again, what is that we're looking at here? Again, I'm not an investment advisor, but this is what this is the position that looks interesting to me. And that's looking at being long the 75 calls for July 16th and being short those 80 calls for July 16th. Tim, thank you very much. Thank you very much. I appreciate the comment you got there. Let's throw that up there. Appreciate your donation. Again, that will be that'll be very great for our charities that we'll be looking at. We'll give you guys at the end of the month. We typically start talking about charities that we donated to for the month of June. We'll see where that goes. But thanks again, and I appreciate the donation, and thank you for the comments as well. So that is Citigroup, and again, that's based off of Citigroup trading right now just above 75. All right, so you're really buying the at-the-money calls and you're selling the out-of-the-money calls. You know, buy something closer to the stock price and sell the junk. I talk about that all the time. Sell the junk. I love selling the junk. I'll sell the junk all day long. I did videos on selling the junk. And so, I like to sell stuff out there that I believe is junk, and I like to buy things that other people believe is junk. And that's what trading these spreads is all about. Okay. Did I miss meme stocks, guys? I did miss meme stocks. I'll end on meme stocks. And in fact, I want to make sure I have those meme stocks ready to go. And so I have them right here. We'll start with clean energy. I'm not done yet. I want to get back to this morning report because there is something else that's very, very interesting. It's on the unusually high put volume. So as we were talking about calls, puts are the same thing. I mean, we look at put volume, and that's the amount of buying and selling for put options in a security for a single day. We're looking at an actual put option strike price and expiration date when it's unusual. We see unusual volume. So we're going to use that unusual put volume button. And when we click on that, we get, if you have the app, it's there in the app. If you're using tomsoptiontools.com, right? So that's the software that we use. And that's the software I have on the screen right now. If you want a 2-week free trial and you've never used it before, down below, description, check it out, right? But if you take a look at this particular unusually high put volume prices, well, here we go, big screen. I'm looking at CCL. That's the most puts that were bought in unusually high in CCL. Microsoft comes in at number 2. That's a very interesting one. The 200 puts. Looking at those 2022 200 puts is, I look at that and I think, is someone that interested in Microsoft going down? Is it because of the divorce? Is it because of the potential scandals? I think not. I think it's because of something more, and I'm thinking in a different terminology than anyone may think. And I'll talk about that in a moment. I mean, let's take a look at what rounds out the rest of these. You see here, gold is on here. That's GOLD, the company. Also, you got U.S. Steel, Facebook, Delta, British Petroleum, and NCLH as number 8. If we round out those top 10 down a little more, Tesla is on here as well. The 700 puts for July, and then looking at Blackberry down at the bottom. By the way, Blackberry is a meme stock. We'll look at that as well. We're gonna end out the session looking at memes. Of all of these stocks, the one that has the most interest to me when I cross-referenced and cross-scanned these, Microsoft. Microsoft had a very interesting, the fact that someone's out there in 2022 looking at this one. And when I look at the actual that actual option itself, and this is where using our tools gives us some more of an advantage. We see that over the last week that this particular option itself has gone up quite high. This is not a cheap option at all. And you can see that the stock price has actually gone high. Excuse me. This is the stock close price. Look at the options. They've come down in value. This is the bids and the offers on the options themselves. Implied volatility. Well, it has been lower back in March and again in May. It's kind of bouncing a little off those lows. That's the IV. I can look at option Greeks on here, such as the options delta. The options delta, when I see this down here at, a minus, between minus 10 and minus 15, that means this is an out of the money option, okay? Gamma low, Vega low, theta is actually quite high when you consider where that is, but that's a negative number, so that negative theta when it's high is low. And then volume, option volume, you see there's that option volume that popped in, and that's that unusual put volume we had. We had unusual put volume a couple months ago as well. So all of this comes into play. There's that open interest. And look, it's been climbing more and more. And what's happening is that more people are getting into this put option. It doesn't mean they're buying it. It means they're getting open positions, whether they're long or short. Here's what I think. I think there are some traders that are taking advantage of the crowd. I think that these traders are selling put options. The other reason I think that, because Microsoft is one of those stocks that typically goes higher. In the last 10 years, 90% of the time, it's gone higher between now and mid-July. We don't have to go all the way out to 2022. But there's some put selling going on with Microsoft. I'm curious, with Microsoft, let's just take a look and see what those options look like for July. All right, small window. There we go. Let's get a little bigger. Here's Microsoft. And again, this is June 18th. I'm looking at July 16th. Why that third Friday? That has the most number of strikes in the series. All right, doesn't have the most number of expiration days because you can go farther out than this, but it typically has the best liquidity. Okay, has the best liquidity there. And so take a look at that liquidity and you'll see from here, I'm just going to simply go over. I'm going to update this. I'm going to look at a chart and I'm going to look at put options. And there's those puts. These are actually, you know what? Remember, the 200 puts were the ones that had the high, that high unusual put volume. I don't need to look at those. Look at the 250 puts for July. Look at the factor trading for $2.69. And you say, all right, 250 puts. I can get 1% return on the actual strike price. All right. On the margin, which is 20% of that, I can get about a 4 to 5% return inside of the next 30 plus days if I were to sell that put. If I sold that put, what's it mean? Well, selling a put means that I'm going to get paid a premium to sell this put, right? What's it going to look like on a risk graph? Well, it's going to have some risk, folks. Selling puts do come with risk. And the risk is that if the stock price drops, this put option is going to get more expensive, which means if you sold it, you got to pay more to buy it back. That goes down. But if you're looking at this as an investment, as cash secured puts, it's basically giving you a way to buy the stock at $250 a share and being paid in the process. So you're buying it on the low end of where it's been in the past 30 days. If it goes up, you don't get the stock. You just get to keep the premium. If it goes down, you may get the stock, but you still get to keep the premium. In every instance that I can show you, if you let this thing go all the way out to expiration, you keep the premium. The difference is you might own the stock, you may not own the stock, right? But to me, I like that better than putting a limit order down there at 250 and buying the stock if it gets to 250. I can guarantee the limit order by selling those puts at the 250 strike today and getting paid in the process. All right, let's finish out here the last few minutes by looking at meme stocks. And meme stocks, again, are those stocks that are generating a lot of excitement on Reddit. They're generating a lot of excitement with the Wall Street bet crowd, right? And I want to share that with you here, guys, too. So let's take a look at the Reddit stocks. And I see some so guys, I really appreciate the comments there. Richard, thank you so much for the comment. Vika, thank you so much for the comment. I appreciate that as well. What kind of impact will inflation have? If the Fed actually acts on inflation, I think there will be an impact. But What did we hear yesterday? 2023 now? They're talking about potentially raising rates. That alone is causing the oil markets, commodity markets to pop again today. But, that's the thing that, that's that digestion that, again, if you're looking at commodity-based stocks, that's a positive for you. That's a positive for me. Look at stocks that are based on commodities. That's a big thing. Big thing, guys. How about selling a spread on stocks like Microsoft? Absolutely. Jaro, that's a great point. Selling a spread will allow you to do what? You get that high probability, but you will not get the high risk in the event that the stock craters, if the Microsoft will crater. All right. Okay. So let's talk about meme stocks. I'm not going to spend a lot of time on meme stocks, but I do want to share with you the top 10 meme stocks. And yes, AMC's in it. And yes, GME's in it. But not all of these stocks are catching the fire that you and I might expect them to be doing. All right. So clean energy fuels actually is the most talked about stock, was the most talked about stock coming into today. Right. So you take a look at clean energy, you could see that clean energy was an $11 stock back in May, dropped all the way down to $7.50. But look what happened in the last couple of weeks. We ran up, we dropped down, and we hit that $11, just below $11. That resistance became support. And we bounced off that again today, moving higher. The fact that the implied volatility levels are so high on this stock, if you like it, again, maybe the weekly options could offer you some really intense put selling opportunities to put the probabilities on your side. Number 2 is Blackberry. Blackberry was an $8 stock a month, 2 months, a month ago. Ran from $8 up to $20 before pulling back. But this is interesting. It did not even hit that 38% retracement at $12.85. And now here we are back again above 14. Implied volatility, the options volatility was huge, 340% when everybody was talking about it. The comments have come down on it. So has the volatility. But still at 140, expensive. Blackberry was in the expensive option price report that we shared with you. That's right there on the app. So go take a look at it. Next, Clover Health Investment Corp was a meme stock that was being talked about a lot. $7 to $28, absolutely cratered last week from 28 back down to below 18. Big move down. It carried forward the next day, dropped down to around 14.5. Getting a little bit of a bit of movement here today. I'd like to see this close above the 38% high, and then technically it looks like an interesting opportunity. But I don't follow opportunities because everybody's crowding into them. In fact, I like trading against the herd. I like the contrarian trading theory. AMC is catching some bid today for sure. In fact, if we take a look at the latest chart, and I'm going to bring the latest up, and let me just move forward back to AMC. You can see AMC is getting close to its all-time highs. Now, AMC did not suffer the problem that GME suffered. AMC, in fact, has done a couple of right things. Right? They're getting more stock. Right? They're taking advantage of the stock price and looking to to add to their banks. The problem I have with AMC is that I really do believe the movie industry is going to change. I don't think you're going to see people crammed in for a while. Even though mask off is happening, I don't think that people just want to be near each other. Mouth breathing next to each other for 2 hours, 2 to 3 hours. I think it's going to take some time. I do think that AMC could have an opportunity here to transform itself into a digital company. If it did that, and it went up against the Netflixes of the world, and it went up against Disney Plus, they might actually be able to take advantage of digital media before, because they're able to get these things before everybody else. I know Disney's in that business now, but they could come out there and do it too, and they could have some price points. Guys, let me tell you what. So Cruella is the latest movie to hit Disney Plus. But if you want it now, you got to pay $30 or $40 for it, right? Even though, so get this, I got to buy Disney Plus, and if I want to watch the movie Cruella, which I didn't, kids did, I got to pay an additional $30 or $40. I don't know what the price was as a premium to watch it now. Otherwise, in 60 days, then it becomes free on Disney Plus, but Disney Plus is a membership. You know what that reminds me of? That reminds me of buying a gym membership and then paying somebody to come to the gym with you to help you, a personal trainer, at the place you pay for a gym membership. That's what it felt like to me. Of course, I get a lot of pushback on that, and I probably still will. I got pushback from the family on that. No, Disney Plus is different. Anyway, what I'm saying is that if AMC were to take a role in the digital media area, I think they actually can make some money. So we'll see what they end up doing. Stock's interesting. Looks like we could get a push to new highs, but we got to get above that 62.55 area. That would be very interesting, and a very interesting trade. I've done some trades on AMC with the room here. The number one trade that I seem to make money with is selling credit spreads out of the money. The out of the money credit spreads might look very interesting, somewhere down here in the 45-40 range or 40-35 range. Look at last week's lows. These are the areas you might want to sell at or below. All right, CLSR, this is Corsair Gaming. Big pop this morning, big drop. I don't know why it's being talked about across the Reddit community, but somebody's losing a lot of money in this one. Just had to bring it up because that's what everyone's talking about. Workhorse is also on here. Workhorse is a $15.50 stock. Last month it was trading at $8. It's garnished some movement, but in the last couple of days kind of falling apart. We get below these lows of last week. Here at 15, we're going to be dropping down into the 38.50, potentially 61% area. You remember, these are the guys that lost the contract with the U.S. Postal Service, and they've been trying to figure out how to get things going again. Meme is what has been getting this stock going again. I don't like it. GME. What happened last week with GME? Well, they released their earnings. That was no surprise. Big surprise was that the CEO is moving out of the way, and now they're getting a CEO and a CFO who used to work for Amazon. And for some reason, the crowd, the GME crowd did not like that. And it pushed the stock lower. Had a little bit of a run up on Friday, but it doesn't seem to be looking good for it as of today. We get above and close below the 222 area, and we're looking at 200 as the next move down for GME. Alibaba's part of the memes, part of the Reddit community. Well, there's been a lot of posts on it through social media. So I had to share it with you today as one of those top 10 most talked about stocks. And then you've seen that go from 232 down to 206. It came up for a day and got above the 68% retracement level, but has now dropped below the 32. This area, this 38% retracement at 215, that's going to become resistance now. That is going to be a resistance target. If we get it up there, it's going to be hard-pressed to get above it. All right. SENS, Sensionic Holdings. Definitely meme environment as a $2 stock on average. Has jumped up to now $4.40. This one looks like one that's going to garnish more and more talk until we have a big day down. You could continue to see a lot of gaps happening in this particular stock itself. Does trade options, but why trade options on a $4 stock when you could just buy a $4 stock if you really like it that much? Cliffs Natural Resources, all right, and that's CLF. CLF recently had a pullback from 22.5 down to 18, jumps up to 24.40. Look at today's action. Opened right in the middle of that candle and dropped right back down. And we're getting close to the $22, 38% area, which is a buying opportunity. And we're gonna finish up with Planeteer Technologies, which is also definitely a meme stock. And it's also a stock that you can see here had its lows back at 18.5, and it is sitting on brand new highs as we speak today. So the trend has definitely been your friend for Planeteer. All right, let's take a look here at some couple more more comments that we have here. James says Corsair and Clove Citadel have major chunk of ownership, institutional ownership lists. Good point. Good point out there as well. All right. AMC digital. James says AMC has a digital platform. If you actually Google it, they've had it for a while. Yes, but what's happened is their digital platform, they just haven't had the money they need to really push it out there and make it something big. Like when you think digital platforms, you think Netflix, you think Disney Plus, maybe Hulu, maybe Vudu, but I don't see AMC up there in that top 5 at all. So they're doing something wrong when it comes to advertising that. All right. Kind of looking forward, Sense is a good company overall. Do you even know what they do? Again, guys, I'm bringing up stuff literally on the fly. Now, when I talk about meme stocks, when James says, do you even know what they do? That's how I'm taking it. No, I don't. You know why? Because I don't trade it. Most of the meme stocks I don't trade. So they're showing the diabetic system is getting an FDA approval. The FDA approval that we saw last week, that was the biggest thing we saw come out. That was in Biogen. And, Biogen's a stock that I do trade. So there are stocks I don't trade. I don't know every single stock on the planet. I don't trade every single stock on the planet. In fact, the stocks I do trade are about 325 of the 1,000 stocks out there. What do they all have in common? If I were to group them together, well, they all trade options. They all have weeklies. So that means they trade options a lot. And that's what we do, guys. That's what I do with those particular options. To kind of finish out with you here, the other thing that I do with these 325 optional stocks is that I'm into looking at rules-based opportunities. All right, these are opportunities that could be technical, that follow technical patterns that happen over and over and over again. Okay, they could be seasonal patterns that happen over and over and over again. They could be contrarian trading strategies that happen over again. They could be I look at patterns that are also statistical patterns. But I put those, I chunk those into that create alternative risk strategies, which is number 2 on the screen. And that could be a high probability strategy. Like, for instance, and blow the screen up so all of you can see it, because you guys all know what I look like. You could look at things like put selling opportunities. Those are high probability strategies. Other high probability strategies include put credit spreads if you're bullish. Call, those call credit spreads if you're bearish. So those are some things that you can do as well. All right. There's several things you can do that are out there that involve step 1, creating rules-based opportunities. But if a stock's a meme stock and it doesn't have rules-based opportunities in it, I don't trade it, because I don't want to get into the emotion. I don't want to get into the drama that's happening right now. Think about for a moment, for those of you, and I look at the statistics. Yeah, I know the majority of folks that watch me, whether it's on a live stream or whether it's on a video that we do. I know the majority of you out there are probably 45 and older. And as we go into the 25, 35 camp, it goes down. And as we go into the 15 or that 18 to 25 camp, it gets real low. All right. But if you're less than 35 years old and you're watching this live stream, I'm going to tell you something. You are the 1%, because the majority of folks that are in that 35 year that are millennials, or that in the Gen Y camp or Gen Z camp, most of them are trading on emotion. Most of them are trading. They're either watching live streams. All they're doing is watching stocks that are being day traded every day. They're getting sucked into the hype. And I'd be willing to bet the majority of them are losing money. And they're losing money because they don't have a rules-based approach. They do not have what I call an objective trading strategy. It's all subjection. It's all hype. It's all fear. It's all greed. And, you know, if I want to get fear and I want to get greed and I want to get, you know, excitement, I go up town to the Seminole Hard Rock Casino, right? At least I get free drinks, you know? So I don't do it here. This is a means of making money. And if you want to make money in the world of the markets, you have to go against what the public is doing. That means you have to take rules-based opportunities. And it doesn't guarantee you're going to be right all the time. I'm not right all the time. I don't know anybody who is. I had a track record in selling puts on a strategy where I looked at puts on a long-term basis. I went a whole year batting 1,000. But recently I've lost money on a few trades. It happens. The part that separates the folks that do this as a career from the folks that are doing this as a hobby or because they need a fix is how they manage money. All right, how they spot rules, how they go in and out of the markets, how they follow the rules, and how they manage their money. And I say that to those of you because for those of you who want to be in this for longer than the next couple months, for longer than the next meme stock, then I believe you're in the right place. And I want to thank all of you who have been here with me, not only just those of you that have been, you know, brand new, that's joined us over the last couple of weeks or joined us over the last couple of months, but I've got folks on here that have been with us and following us for years and decades. Do we have any decade group in here? Do I have my Optionetics students in here? Give me a shout, guys, right now. I want to see you on the screen. Who's been with me for longer than 5 years? Who's been with me for longer than 10 years? Who's been with me since the 90s? Since when I worked at the American Stock Exchange. I mean, that's the, you know, Herman trained me in 2006. 2006. Man. I mean, was Netflix around in 2006? Yeah, I think they were doing the CD or the DVDs back then. 10 years less, 5 years, Gary. All right, awesome. Craig's been here. I have. So I bring this up, guys, to share with you the community, the like-minded community of folks that we have here. All right, and so you know. I'm merely saying this to those of you that, you know, I haven't been here for 6 months. I didn't just start doing this. I've been doing this over half my life. I'm still here. The game has changed for sure. All right. We're not in 8s and quarters anymore. We haven't been in 8s and quarters for a long time. All right. I remember when 8s and quarters changed to pennies. I remember when options went from being 5 cent, you know, from 25 cents to 5 cents to inside the 5 cent bid ask. Cryptocurrencies, I mined them. I mined cryptocurrencies. I wish I mined them back in 2009. I didn't. It's 2013 before I started doing something with them, but I still got in at good prices. All right. And I'm here now, and I'm going to be here tomorrow. I'm going to be here next week, next month, next year. And so I tell you this because, you know, follow along, guys. We do live streams here once a week. We do videos once a week. I'm going to be doing a concise video on unusual options. And I also do a podcast once a week as well. Join me very soon. If it's not this week, it'll be next week. I'm actually doing a podcast with a Gen Zer. A Gen Zer that's in the markets, all right? Or Gen Y. Teenager in the markets, has some money, has been investing, wrote a couple of books. And those of you that are, you know, in the 25, 35 or less camp, 25 less camp, you're going to join me on this podcast that's coming up because I'm going to be asking him the questions of what got him from a small account to a much, much larger account. And I think you're going to be surprised at the answers that he's going to give. So, guys, thank you very much. Do me a favor before you kick out the door. Please help support the channel. Hit that like button below, all right, below the video. I would really appreciate if you found this information helpful. Please like, this live stream. It helps support the channel. It does something with the YouTube algorithm, and it does help support the channel. Also, share the videos if you find somebody that you think would like to become a rules-based trader, would like to become a trader of alternative strategies other than buying and holding stocks, and also a trader who's a rules-based objective trader. And finally, if you're new and you want to catch these on a timely basis, hit the subscribe button, hit that notification bell, and you'll get my video when it shows up tomorrow. You'll get my podcast when it's out toward the end of the week. You'll get all these videos and podcasts and live streams on a real-time basis. Thank you all so much for joining me today. Have a great rest of your day. I'll see you again on the next one. Bye now.